My name is Philip Williams. I'm the CEO of IsoEnergy. We're a uranium developer and explorer. We're advancing the high-grade Hurricane resource in the Athabasca Basin in Canada, and we're bringing mines back in production in Utah in the United States.
Mr. Williams, welcome to London.
Thank you. Good to see you, man. Good to be here. Oh, it's phenomenal. It's just exactly what we expected.
As advertised.
Yes.
They're bucketing down.
Yeah.
Right, we're here at the WNA conference. It's rammed. What's your reading of it?
Well, rammed is the word. In fact, and we've been coming to this conference at least for the last 10 years. This is probably the busiest I've seen it. And quite frankly, the most diverse group of people here. People in the industry that we haven't seen here for years, investors. We've been to a number of events and had meetings, of course, at the conference today. And just a bit shocked by how many people are here considering the mood out there in the market.
Well, I think you're referring to the disconnect between equities, what's happening there.
Correct.
And what industry thinks.
Well, exactly.
Right?
Exactly.
So people downstairs, they're more than enthusiastic. We've got government here, we've got utilities here, we've got funds here, we've got industry players more broadly in here. They seem to get the need for supply to get moving because the demand is not in question.
No, 100%. And in fact, you talk about the investors and meeting with them directly and seeing them in the halls. And again, speaking about the volatility in the equities, being on the corporate side, we've been a bit shell-shocked. Talk to the investors. They don't seem to be worried. They're very optimistic. And in fact, a lot of them are looking for stories with catalysts and things that they can invest in and buy at the bottom is what they're thinking right now.
Right. And well, it seems to me a tale of two halves in the sense that the projects which are kind of a bit more advanced, a bit more line of sight to production, a bit more line of sight to value creation, are getting the conversations and the doors are open. Exploration on the other side of that conversation, they're struggling a bit at the moment. Certainly struggling in terms of the equities, but it's also struggling in terms of accessing capital and cheap capital like that.
100%. And what we've seen over the last few years is a lot of new entrants to the space. And it's very reminiscent of the 06, 07, 08 bull market of uranium, where something like 400 uranium companies were formed over that period of time. And only a few survived. And those survivors are the bigger companies that you're talking about that are still getting attention, getting investor interest. But even in this very small sort of resurgence, we've seen dozens of companies come to the market. And I think they are going to struggle. I think particularly the smaller market cap companies are going to struggle to capitalize their businesses and move their assets forward. For us, that's an opportunity. And our strategy, we are an acquisitive company. We've built this business, this portfolio of assets through acquisitions over the past 3 years. And we definitely think there's some opportunities out there because of that disconnect between companies like ourselves and some of these smaller groups.
I totally get that. And it's a case of the haves and the have-nots, right? So to make those acquisitions, to take up those opportunities of, bargains, quite frankly, because you're only going to go after the good stuff, you've got to have access to capital. So remind people of the kind of setup that you've got here and maybe the business plan and therefore the strategy with that capital allocation.
Yeah, look, we're a unique company relative to our peers because of our shareholder base. Our two largest shareholders are corporates. NextGen Energy owns about 33% of the company. Energy Fuels owns 5% of the company. And then behind that, we have a great list of institutional investors who are in the uranium space for a long time, focused on it. Mega Uranium owns over 2.5% of the company. A fund in the United States called Sachem Co. also owns about 2.5% of the company. And these groups have said to us, build the business and we will support you financially. We do have a strong balance sheet today. We have over $40 million in cash. We also have almost $30 million in equities in other companies. So we have that behind us in terms of on the balance sheet today, but then supportive shareholders who will back us if we find the right opportunities to pursue going forward.
But it's support you. I remember from banking days, we talk about dumb money, smart money. Given the nature of that register of yours, we'll put that in the smart money category.
Oh, they're absolutely the smartest money, right, in our opinion.
Yeah, absolutely. But it's more a case of they need to be really clear about what your model is and why that is the best use of the capital they give you and how you go about delivering that value going for. So in terms of what does that look like in reality?
Well, I think there's two sides to it. I mean, first off, we are all fundamental bulls on the space, and we can talk ad nauseum about demand and supply and this massive disconnect, right?
Yeah.
So that's happening, that's real. But our backers say, well, in that environment, what kind of business do we want to create to maximize value and be investable to the universe of investors out there? And what we look at that as a couple of things. First of all, production. So that's what we have in the United States. We have past producing mines that we can bring online very quickly, and we're doing that right now. We opened the Tony M mine a couple of weeks ago, and we're in there actively developing it. And building on that production profile is something that they would support us in doing, particularly in the United States. So the United States stands out, and jurisdictions are important for us. We're the only company other than Cameco that's focused on the three, what we consider best jurisdictions in the world. So that's Canada, the United States, and Australia. In the United States, as we say, we have near-term production. We think there's an opportunity to grow that production profile as well at a very important time when the U.S. needs that supply. In Canada, we have, we talked about it before, we have the highest grade undeveloped project in the world at Hurricane, 34.5% uranium grades, and a very interesting dynamic in that part of the basin where the project is, where our neighbors are the big boys. It's Cameco and Orano. They sit right beside us. They have, in fact, the extension of our deposit. And there is a requirement for that asset to be developed over time in order to feed the mills on that side of the basin. And then Australia, we have development and exploration properties there. But what we would look for when we're taking it back to potential M&A candidates is something that is a 3 to 5 year development project in one of those good jurisdictions that could add meaningful production to our profile. So we think we can get to 1.5 million pounds of production out of what we have in the United States. We'd like to grow in the United States and then add on another 3 to 5 million pounds through other acquisitions.
Right, let's talk about the economics there in terms of 3 to 5 year profile. It's great, but it costs a little bit more. But it's a little bit more certainty compared to let's get after some heavy duty exploration, right? So getting that balance of the portfolio is important to you. So I get it. Say, right, we're a producer. You can say we're a producer profile now, right? And we're going to advance that forward. The development stuff, is that where the kind of best leverage is in terms of risk reward?
I think so. I mean, look, I think there's a couple of different ways to approach it. There are some of the have-not companies who have assets that they, quite frankly, can't move ahead. And what it comes down to is you might have a great asset, but when you put out a study that says our CapEx is X hundreds of millions of dollars and you simply don't have the market cap to do it, you need to look around for a dance partner that can help do that. We think we fit that profile both financially but also technically. We have a very strong technical team that can bring their skill set to bear on some of these other assets that we're looking at. So I think those opportunities are there, but they have to be accretive. They have to make sense. They have to be in good jurisdictions. They have to be developable. But yeah, we see a lot of good opportunities out there, particularly now in the market.
Right. I want to briefly talk about Australia because I gave you a bit of stick about Australia. Timing's everything.
Yes.
Elections coming up. Labour government in Queensland, which is where you've got assets. Looks like, well, polls suggest they won't necessarily be there, and maybe nuclear is getting a fairer hearing in Australia. What's your expectation of being able to do business there?
I mean, look, we see the same things you see in terms of support for nuclear on the national scale, and quite frankly, it surprised us that it's taken this long because the rest of the world's there already, pretty much. But listen. What we like about what we've put together is we have a diversified portfolio. So we have projects that can work when other projects can't be worked. And again, when we talk about the have-nots, there are some people that are in these jurisdictions that are struggling to move their assets ahead because there's no support. When the switch flips, which we believe it's going to, in Queensland, we'll be ready to go. We have a number of projects. We have resources. We have projects that, quite frankly, were in the permitting process to be mines and got derailed because of the 3 mines policy originally. But we also have a tremendous suite of exploration assets that we picked up at the bottom and no one was doing anything on them, that we could activate on very quickly. Again, if the jurisdiction comes along and wants us to do that.
Right, and what we've seen in the market is companies like UEC, Denison, and over the past 3-4 years, building up a big portfolio, being acquisitive, and that they've been rewarded handsomely for that. I think given the market that we're moving into now, do you still see that as something that can continue to be rewarded? Is that something you want to do?
100%.
Right, 100%. But how important is the kind of having the production profile layered on top of that for you?
Well, no, that's key. I mean, it's not just growth for growth's sake. It's about how do we increase our production profile.
Right.
And again, we've got near-term production. We'd like to make those production rates larger, of course, and be competitive with some of those people those groups that you're talking about. I mean, I do think though that one of the misconceptions in the market that some of these companies have tens of millions of pounds of production coming forward. There's really only one company out there that has a very large producing asset to come forward, and that's NextGen. The companies that you're talking about, and particularly in the United States, and some of the assets in Canada can do more pounds, but in the United States, the biggest projects will do 1 million, maybe 1.5 million pounds.
Yeah.
And it's going to, the production that will come from the States has to be cobbled together from multiple different mines. And that's just the way it works in the United States and the way it's been in the past and the way it will be in the future.
Does that mean you would discount maybe a roll-up strategy of some of the, if I look at Wyoming, you're right, there's 500,000 pounds, 1 million pounds here. But the quite far apart, it's quite complex to kind of cobble something like that together. But there aren't many big projects that you could get after and say, well, here's something that's capable of producing 3-5 million pounds in North America at the moment, it seems. So
well, there's one in the United States. There's one in the United States that we own.
Yeah.
At Coles Hill in Virginia, our 160 million pound project. Sure.
I met Coles Jr. in London.
Yes.
And he was explaining the background. It's absolutely huge.
It's a tremendous asset, and it's goes really, quite frankly, unnoticed in our portfolio, and part of it is because we don't shine a lot of light on it just yet, because we have some work to do in terms of bringing the state along and getting them to support the project. But when you talk about some of the competitors in the United States and you go, okay, they might have a 2 million pound, 3 million pound production across multiple assets, and we're in that category today as well. If you want to get 5, 6, 7 million pounds per year to feed the biggest demand source for uranium in the world, which is the United States, this project could make a real difference.
It sounds like I'm super excited in the sense that what I've now been told about when are you guys going to start talking about it? I know you've got some stuff to do, but when do you think you're going to be able to kind of come to market and go, like, the potential is X?
Look, not dissimilar to Queensland. There are elections coming in the state that are important to making progress. But I think we're okay with the time frame, because the country overall is getting on board with nuclear power. There's bipartisan support for nuclear power, and as we get closer to the Russian fuel ban taking full force in 2028, there are going to be a lot of people looking around the United States and going, yeah, and by the way, it's great, get product from Canada, get product from Australia, but there's a lot of uranium domestically, and it would be shocking if we didn't find ourselves at the table with this project in the next few years, where people are saying this has to be developed. I mean, in fact, they're telling us that it has to be developed, maybe even providing financial support for it.
Right. Okay. And so where else do you look? Obviously, we're talking about potential roll-up in a place like Wyoming and Utah. In fact, we're going down to the 20M next Saturday. I think we're doing that.
Yeah. Well, I think that should be really good. I mean, this is a mine that hasn't been opened in over a decade. And when you open a mine, you go in with unknown expectations about what the condition of the underground will be. And I think what will shock you about it, there are a couple of things that will shock you when you get down there, and I hope, and you'll get it all on camera.
Heat, being a British person, was the first thing, I suspect.
Yes, it'll be warm. I mean, it gets up to 40 degrees in the summer. I'm not sure what it'll be when you get there in the next week, but I think the couple of things, as you drive into the site, you will see far more infrastructure in better shape for a mine that hasn't been in operation for over 15 years. All there in good shape, ready to go, ready to support operations. And then when you go underground, I think you're going to be amazed by how much development there is. And there's a big difference in restarting our mines. And there's a bunch of our competitors are talking about restarts, and they're talking about capital costs of tens of millions, if not hundreds of millions of dollars to restart these mines. Our CapEx is almost zero. The mine was built and in operations, and the infrastructure is there. It's really about going in, mapping and sampling, putting together a mine plan, sequencing, okay, where are we going to start mining, in what order, how much are we going to take from each area, hiring contract miner. There are no big capital projects there. So, I don't know how investors are thinking about the different opportunities and saying, well, this mine produces 1.5 million pounds, but it's got 100 million capex. This mine produces 1.5 million pounds and has a 0 capex.
Yeah. I'm more concerned with the margin.
Yes.
Making money. I think the other part of that equation is, and the other thing we're also going to go down and see is the White Mesa Mill.
Yes.
Right? You kind of got that arrangement with Energy Fuels.
That's right.
As I understand it. That drives my thinking around, can this company make money? Not just be a participant, but perhaps actually make money, which sometimes miners forget to do. But that's a great learning curve for you guys. And I guess an insight into what you're going to need to do going forward in terms of building up this portfolio of yours.
Yeah, look, it's walk and then run. So it's get this mine up and running, build out the team, and you'll meet the guys. We're added to our team along the way. We hired a great mine manager we took him away from one of the big gold companies, and we built out our geologists and permitting people on the ground. You'll get to meet them, but then we can take that expertise and bring it to other mines in the area. Right. And it's the partnership with Energy Fuels is really important on a number of levels. Obviously, we get to send the ore to their mill, and they're I'm not sure if you talked to Mark this trip, but they're months away from reopening the mill.
Yeah.
But we get all the expertise of their team. Anytime we have a question, these mines were owned by them, so we have a question, looking for something, some piece of information, some idea that we want to run by, it's called the people on the Energy Fuels team, and we get that. If you didn't have access to that history, I think it would be a much tougher exercise. And so it is a tough exercise for other companies that are just trying to bring something up from scratch.
Oh, for sure. It's a missing link. I spoke to Mark last week, seeing him in 1 hour, and we'll hopefully see him down at the White Mesa Mill as well. So I think they're as excited as you are on that front. Just I know you've got a dash, so just if you don't mind, final question on how you're reading the capital markets at the moment. I think this space has been fantastic for waiting for catalyst moments to come and go and change our lives. Most recent one, obviously, Kazatompром's announcement in terms of production. It's, as an investor, super exciting news. Maybe not so much if I'm utility, or one of the buyers at the utilities, but it feels like a kind of coiled spring in the sense that this supply gap seems to be growing, and that's just from what we know. I think there's probably a slew of companies maybe claiming to production numbers which may not be deliverable as well. I suspect, like any commodity, like any metal producer, it won't necessarily hit the targets as advertised.
Absolutely. I think that's going to be one of the things that may be a catalyst is all of these restarts.
Yeah. It's always a problem.
It's always a problem. And it's nothing to do with the quality of the team or quality of the assets. It's just things take longer and they cost more.
Yeah.
And so when those numbers start to trickle out and the realization comes from the buyers, and also costs are higher than they were in the past. So that may be one of the catalysts. The other thing, I don't know if you've pulled up the seasonality of uranium graph.
Yeah.
The end of September, October is typically the best time for uranium prices. We were here last year. It was okay mood, and then all the price of uranium and the equities all ran very hard after WNA. So, we were excited to come, notwithstanding the beating that the markets have taken, and a lot of that's not uranium focused. That's the broader market. Yeah. But I think we're well positioned, and the next couple of months can be pretty exciting.
No, it's super exciting, and I think the thing to say is we want everyone to succeed, because even if everyone succeeds, there's still not enough.
There's a lot of room in this. There's a lot of in this market for sure.
Right, go do your thing. We'll see you soon.
Thanks, man. Appreciate it.
Bye.